I welcome you to the other consult platform once again. We are coming to continue with accounting for oil and gas by solving another practical question to broaden our level of understanding. And I read the question. OT Oil Company began operation on 1st January 2004 with acquisition of lease in Cape 3 Point. During the first year, revenue earned was 487,500. The following costs were incurred, and then the costs are D&D costs, that's the geographical and then geophysical costs, 113,100, and acquisition cost 188,500. Exploratory dry holes 2,639,000, and then exploratory well, the one which was successful, 1,508,000, and the development cost 942,500. Production cost 94,250. Then depreciation, and then amortization cost for successful efforts 75,400, and then that of full cost it's 169,000. You are required to prepare the appropriate set of financial statements giving the above information for OT Oil Company Limited on 31st December 2004. So per the information, the only financial statement that we can extract from this is income statement and then balance sheet statement. So we start with the name of the organization, which is OT Company Limited. We start with income statement. Statement basically contains revenue and then expenses. So we start by recording our revenue and then the various transactions, the one which will be regarded as expense, that will be written off against our revenue at the end of the accounting year, will be recorded under the income statement. And then for the transactions will be capitalized. It means that they will form part of the cost of the assets, which will be recorded in the balance sheet. We start with our revenue. So the amount of revenue given is 487,500. Give it to us in a question. So we proceed by recording our expense. So the first item given is D&D cost. So for D&D cost, another successful effort method, it is always written off as an expense, and then the full full cost method, it forms part of the asset, so we capitalize it. And then the amount of D&D cost is 113,100. So another full cost, it will be 0 since it will be capitalized. And then the acquisition cost. So for acquisition cost, it's form part of the cost of assets under the both method. So we will record it in our income statement. Exploratory dry holes. So for exploratory dry holes, under successful effort method, it's treated as an expense. And then under full cost method, it's formed part of the cost of the asset. And then the amount is 2,639,000. So full cost it will be 0. The next transaction is exploratory was the one which was successful. And then since it is successful, under successful effort method, it will form part of the cost of the assets. And then under full cost method, it will also form part of the cost of the assets. So we will record it in the income statement. Development cost. So for development cost too, under both method, it forms part of the cost of the asset. So in the income statement, it won't be recorded under income statement. We'll be treated it in the balance sheet. And then for production cost, it is written off as an expense under both methods. That's both successful efforts and then full cost method. And then the amount for production cost is 94,250. So we have our production cost. Which is 94,250. So the next is depreciation, depletion, and then amortization. So for depreciation, amortization, under both methods, it is treated as expenses. It is similar to the depreciation that we already know. When we prepare our normal or our usual profit and loss accounts, depreciation forms part of the expenses, which is written off against our revenue. Same situation applies here when we are accounting for oil and gas. So and then the amount given for successful efforts is 75,400. $75,400. 169,000. Done with the transaction, so we sum up the expenses and then less it from our revenue to get our net profit or loss. So total expense under the successful effort method is 2,921,750. And that of full cost method is 263,250. So for successful effort method, since the expenses exceed the revenue, means we'll be getting net loss. So we get net loss of 2,434,250. And then for full cost method, the revenue exceeds our expenses, so we'll be getting net profit. And then the amount of net profit is 224,250. So we are done with the preparation of the income statement. We proceed with preparation of the balance sheet. When it comes to the preparation of the balance sheet, only the transactions that was capitalized will be recorded in the preparation of the balance sheet. Next transaction is D&A cost. That's the geographical and then geophysical cost. So for D&A cost, under the successful effort method, it was written off as an expense. So it means we will record it in the balance sheet under successful effort method. But under full cost method, it was capitalized, so it must be recorded. And then the amount for D&A cost is 113,100. The next is acquisition cost. So acquisition cost directly relate to the cost of the assets. So under both method, it is capitalized under both method. And then the amount is 118,500. The amount for acquisition cost is 188,500. And the next is exploratory dry holes. So for exploratory dry holes, since it is unsuccessful, it was written off as an expense in the income statement under successful effort method. So under successful effort method, it will be zero in the balance sheet, but it forms part of the cost of assets under full cost method, so it must be recorded. And then the amount is 2,639,000. That's exploratory dry holes. So it will be zero under successful effort method. And the next is exploratory wells, the one which was successful. So for this, since it is successful, it will be capitalized under both methods. And then the amount is 1,508,000. $1,508,000. And then the next is development cost. So for development cost, it forms part of the cost of the asset. So it is always capitalized under both methods. And then the amount given is 942,500. So we have our development cost, which is 942,500. So under full cost method to be capitalized, 942,500. And then production cost. For production cost, it is always written off as an expense under both methods. So it has been already treated in the income statement. So we will record it in the preparation of the balance sheet. And the last transaction is depreciation, depletion, and then amortization, which is similar to the accumulated depreciation that we know in the preparation of our balance sheet. So accumulated depreciation is always subtract from the cost of the asset to get your net book value. So over here we sum up the value that we have recorded. After that, we less the depreciation and then amortization cost to get our net assets. So the summation of the figures will give us our total assets. So total assets for successful efforts be 2,639,000, 2,639,000, and that of full cost will be 5,391,100. So 5,391,100. So these are our total assets. And then we less depreciation, and then amortization cost. So depreciation, and then amortization cost under successful efforts was given at 75,400. So 75,400. And that of full cost method is 169,000. So 169,000. So we subtract the depreciation from the total asset to get our net assets. Net assets under successful efforts will be 2,563,600. 2,563,500. And that of full cost method will be 5,222,000. So we are done solving the question. So in conclusion, in the preparation of the income statements, only transactions that will be treated as an expense or that will be written off at the end of the accounting year must be recorded in the income statement. And then in the preparation of the balance sheet, only transaction that was capitalized, which means that they form part of the cost of the asset, recorded in the preparation of the balance sheet statement. So someone will ask the reason why we didn't add the net assets in the preparation of the balance sheet statement. So this is just a partial balance sheet statement. That's an extract of balance sheet statement. That's why we didn't add the net income or loss in the preparation of the balance sheet statement. So we end today's sessions here. In case you need further explanation, WhatsApp us on 0249-220363, and then we provide face-to-face teachings as well. If you need our service, contact us or WhatsApp us on the same number. Thank you. In our next session, we will continue with overlift and then underlift under joint venture in relation to accounting for oil and gas, and then how we treat it in the preparation of the income statement and then the balance sheet statement as well. Don't forget to like, subscribe, and then share. Thank you.